Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 U.S. market update. Well, the hat's back by popular request, if you will. Well, at least a lot of you asked about it in the last video. Let's do this. If you like the hat in the videos, hit the like button and let us know. And while you're at it, don't forget, if you're a subscriber to our YouTube channel and post a comment on any of our videos between now and October 31st, it automatically registers you for our big giveaway where we're giving away 10 free quarterly subscriptions to both of our primary portfolios, the Impulse and the Volatility portfolio. So make sure you get yourself registered for that. In the last video, we said, it's getting kind of spooky out there. And today certainly could be viewed as a spooky day. But what do the charts say? Let's take a look. Taking a look at today's bar, and as I mentioned in the intro, today could be viewed as a pretty ugly day in the equities markets, but did it really do any technical damage to the chart patterns? Well, let's take a look. It certainly didn't affect this larger zigzag pattern with that classic 61.8% B wave corrective level, and then giving us the C wave extension up to 100% right in that 381 level that we've been talking about. What was affected, however, is the complex C wave in that larger zigzag, where the corrective move now in that B wave has come down, but look, right to 50%, still giving us a potential 100% C wave extension. Now the difference is the C wave extension isn't exactly in tune with 100% C wave extension in the larger zigzag as it was in the last recording, but still forecasting a move to new highs. Some people would argue that a 50% B wave corrective zigzag has an even higher probability chance of occurring than the 38% one. So really not as much has changed in those two zigzag patterns. To me, what was most important about today's trade and what I wanted to show you is this 340 level. Why is the 340 level important? Well, look, it acted as resistance back in August. We broke above it. We came back, traded through it in September, fell below it, got back, traded above it, and here we are testing it again, closing right on that level, traded below it for a good part of the day, and closed right on it in today's close. It would certainly be more bullish if this 340 level held. If it doesn't hold, well then, does it hold the 61.8% level? If not, is something more sinister afoot, as I like to say, as far as a further move to the downside. I wanted to talk about the upcoming election and historically how election results affect the markets. And I want to preface this by saying I'm not picking a party. I'm not discussing one way or the other. When I talk politics, it's how they affect the markets, not pushing any political views one way or the other. Believe it or not, there's actually a futures market for the presidential election. This is done by the University of Iowa, so this would be similar to the University of Michigan's consumer sentiment survey that they do every single month. And the blue line here is the Democrats, or so that would be Vice President Biden, and the red line would be President Trump, Republicans, obviously for obvious reasons. And it's showing that Vice President Biden is in the lead. Now you want to know, well, how accurate is this? Well, they actually produce their accuracy, and the red square here is presidential elections because they forecast elections other than presidency. They forecast elections in other countries, etc. And with this red square, you can see it's about 85% accurate. But the other thing that I wanted to discuss is how the markets have done historically with different administrations. We've had good markets when we've had a Democrat in the presidency, and we've had good markets when we've had a Republican in the presidency. When the markets do their best is when the presidency and the House and the Senate are not all controlled by the same party. And again, some people may not be happy about this, but the historical facts are that the markets like it best when they're split. When one party doesn't control everything, I guess they view that the market views that, well, not a whole lot of extreme things can occur. So even if Vice President Biden were to be elected on election night, which a lot of people have opined that that would be bad for the markets, at least historically, if the Republicans still control the Senate, then the market still can do just fine. And again, historically, it's going to be a fascinating night anyway. But if we have that blue sweep that some people are talking about, that's a whole different story. That could be a Katie bar the door scenario to the downside, or this move down here to this previous wave 4 in the larger Elliott Wave 5-wave pattern, which is also still qualified. So just wanted to take a few minutes to discuss how the election could affect the markets and what it's done historically. Looking at the 10-year bond, this is going back to today's market. If we had a down day today and that was foretelling of something bigger to the downside, you would expect a big up day in the bond and treasury markets. And yeah, prices bounced up a bit today, as you can see, but nothing really major, nothing like money fleeing out of the equities markets and trying to hide in the bond and treasury markets, which is what usually happens at the start of a significant move to the downside. Obviously that could change, but at least at this point in time, we don't see anything like that. In fact, look at this chart with this big, huge zigzag pattern that we have here, and we still have a C-wave extension target down to 100%. All we did was bounce off the 61.8% extension, which makes a lot of sense. It's a primary fib level, and so it's acting as support, and we're bouncing to the upside. In fact, look at everything that's going on in this 10-year bond chart. This is a complex A wave with this zigzag pattern right here. Then in the B wave, it was also complex with that ascending triangle pattern. And then you can see there's also a zigzag in the C wave. So A, B, and C here are all complex, which makes you wonder, are we creating some sort of a diagonal at some point in time? We'll look at that a little bit further down the road, but pretty fascinating what's occurring in the bond market, or lack of what occurred in the bond market, if you will. And finishing up, let's take a look at the VIX real quick, where we talked about we were kind of in a sideways trading range here, and then boom, we blasted out today. Is that a breakout day? Remember, you need a second day confirmation or follow-through day, even out of a sideways consolidation. Or is this just a lower high and we're forming a larger descending triangle here, similar to what we had going back into June, July, and August? Obviously, if that's going to occur, we would need the VIX to come back down. So if the VIX moves back down into this, that would correspond with the market bouncing back to the upside off this 340 level. However, if the VIX moves up, market moves down, maybe the market is starting to get a little concerned about that blue sweep, or one party controlling the presidency and Congress. Hope you found this informative. Talked about a few different things in this recording. Look forward to talking to you again next time. Get out and vote. Talk to you soon. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.